Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. What we're looking at is a long-term chart of gold starting in 2006, October of 2006 to the present day. And as you can see, we've had a pretty big bull market. Now I want to share with you what's going on in my mind. I think you have a lot of activity in the equity markets right now. They're crashing, and we've given you the story of the reasons why we think that's happening. And also, this is kind of like the magician's play. They try to divert your attention to something else when something else is going on in the other market. And the other thing that's going on is we believe that gold is making a base to produce some good returns in Q4 and in 2015. So let's take a look at gold in depth and show you some of the things that we're looking at that I think you'll find interesting. First of all, we're going to go to our Fibonacci tool, which is right here. We're going to use that, and we're going to measure from this high here. Now this is March 20th of 2008. And we're going to go to the beginning of our chart right here. As you can see, the 61%, if I can get that a little closer, yeah, that's much better. So 61% takes you right down here, 61.8%, that's a classic Fibonacci retracement level. And why I want to show you that is because if you look at the bigger move, if we go here to the highs, to the lows that were created right here, you can see we're very close to the same 61.8% Fibonacci retracement. Now again, this is a bigger retracement, same percentage, but it's more in dollars, if that makes sense. So the pullback has really created a couple of things. It's coming back into a Fibonacci support area, and also if we scope this in even closer, you can see that we have created what they call a double bottom. Now a double bottom is a pretty good sense of a market that has made a bottom and is about to reverse. Now it's not completed yet, but I want to share with you these things right here. So here's one right here. It's one double bottom, and the other one occurred here. The difference between these 2 points is like 50 cents. It's nothing. It's almost a classic double bottom. Now the key thing for this market now, in my opinion, is to move over this area. This is a huge area for this market to move over. This would be the 1400 level. Now we're quite a ways away from that. Of course, we've got a lot of things to change, but the market has made a turn, and I want to share with you where it made a turn and what I think is going to happen. Now we've scoped gold into the last 6 months. You can see quite clearly we've selected it here. You can select 3 months if you wish, or 6 months, but 3 months, 6 months, it's a good time window to look at. So here we put our trade triangles in. Now with gold we use the weekly trade triangle for direction. Okay, that's trend. So you can see, just looking at this last 6 months, here's a trend right here, and this is what's important. Just get the trends right. So here's a trend starting right here, went to here, and then came all the way down to here. So the trend from here to here was down, and from here to here was up. I mean, it sounds pretty simple, but that's the reality of the marketplace. So what we use for timing is our daily trade triangles. Now if I put them on, you can see a lot of trade triangles, a lot of activity, but you can just trade on the weeklies as well if you wish. It's your choice. But the market has made a turn using our weekly trade triangles. Okay. Also, you're seeing a potentially divergence right here on the MACD. Now the divergence means the market made a new low like this, but the MACD did not. Now you crossed over, the blue lines crossed over the red line, indicating, you can see the little histogram right here, indicating that the market has indeed made a turn. So we confirmed that with our weekly, indicating that we are going to go higher. Now you can see right here we're long from this level right here, 1234.70, which I think is a good price, and the market's trading at 1238.48. So it's about $4 profit. Not very much, but it's a beginning of a move. I think you want to look at these very, very carefully, because again, you've got the double bottom, and you have the fact that you've had the Fibonacci retracement. If you're a long-term trader, you want to put your stops under the 61.8% Fibonacci retracement level. That's the advice we're giving you. If you're a intermediate term trader, which is using the weeklies, you want to use the weeklies to get in and out for trends, and the timing for getting in and out of the market. So this gives you the big trend, weekly up, weekly down. Pretty simple. We show you the rules on our webpage. In fact, in the World Cup portfolio, which you have full access to, you can see the actual signals where the market will reverse based on the daily patterns. And this market, gold, has been very, very good to us. So again, you have to be flexible. That's the key thing in trading. You have to be flexible. So with that, we think gold's made a turn. Again, we may see some backing and filling here, but again, we think the market has made a turn, and we expect this market to pick up in the next couple of months, certainly the fourth quarter, and in 2015 also. Hey, I'm Adam Hewison. Thanks for stopping by. I hope you enjoyed this little look at gold and how we think it's going to play out. Have a great trading day, everyone. Ask about any market and get an answer. Only for members and only from MarketClub.com.